Right now, in the meantime, I want to bring your attention to China, because China and the Chinese markets, they were closed today. Now, remember what they were saying yesterday and today? With China closed, they're celebrating the 70th anniversary of the end of World War II. That maybe with them out of the equation here, cooler heads would prevail, money would find its way here to the United States, and all would be hunky-dory. Something happened. Maybe it was that jobless report. Maybe it's growing fears that we've got problems too. Maybe it's this growing realization that China isn't the only problem, that maybe we are too. To Craig Smith, who was ahead of this before a lot of folks I know, savvy money manager joining us right now. Craig, are we China? Are we a problem?
Well, I don't think we're China, Neil, but we definitely have problems of our own. And I've got to tell you, I think it was just before you took your vacation, we talked about the manipulation of the currency down 3.5% and how we were blaming that, or everybody's blaming that on the drop in the stock market. That may have been part of it, Neil, but look, we have the most anemic recovery we've ever had, and now that all those things are out in the open, we're starting to focus back on what's going on the homeland. And here's the reality, Neil. This Federal Reserve has done more, in combination with the Obama administration, with high taxes and regulations and burdensome things like Obamacare, to keep us at a 1% to 2% growth rate. And for Mr. Bernanke in 2010 to write an op-ed piece and say, well, I'm going to pump more money into the market and it'll raise the price of equities and keep interest rates low and create this virtuous cycle where confidence will come back and consumer spending will come back. It hasn't, Neil. We're 7 years into this problem. And people say, oh, you're always too tough on Mr. Obama. Really? Well, let me tell you something. What about one of the first things he did when he came into office is he had his National Labor Relations Board stop Boeing opening up their plant in the Southeast where thousands of people were ready to go to work. And we hear about, well, all these companies are now moving to Mexico and stuff. 15 years ago, Neil, all the major manufacturers overseas built plants in Tennessee, South Carolina, Kentucky, all these areas. Why did they come here, Neil? Because under Mr. Clinton and Mr. Bush, they didn't have the regulations they have under Obama.
So you think that's what's been hurting. But, you know, I got to ask you this, Craig. I mentioned the China at the outset. We were criticizing China because obviously the government there is trying to stall this market slide or stop it, even outlaw it, outlaw short selling, demand brokerages and banks buy stock or else. And a lot of people in this country criticize that, but I thought to myself, knowing you and your views on the Fed and government intervention, we've effectively propped up our own markets the same way. And now I'm beginning to think that the chickens are coming home to roost, that these, you know, canards don't work. And that's what's getting to be a problem, right?
Neil, you know, forgive the plug for Fox Business, but you guys have been ahead of this too. By the way, if you don't get it, you should demand it.
You are so good. You are so good.
No, but I'm telling you, you guys have been talking. Neil, you guys have been talking about this, and here's the reality: Mr. Bernanke manipulated this market in 2010.
You're talking about Ben Bernanke, the former Federal Reserve boss. But go ahead.
That's correct. And Janet Yellen followed suit. She's just a mini
yeah, but they've
Bernanke
run out of weapons, right? They've run out of weapons. We're going to get to this a little bit more in the next segment. But if the Fed is powerless now, they can't prop this up now, then what?
But that's the point. Now the market's going to have to live on its own. And that's why I think the Fed should stop manipulating. They should start neutralizing rates and getting them back to where they should be. Yes, the market will come down a little bit, but it will send a signal to the world that America is confident about our future and that our next president is going to create jobs, we're going to create growth, and we're going to get back to being #1 in America. I mean, in the world, excuse me.
Having you on, and that was long before you were saying nice things about Fox Business. Craig Smith, a very smart money manager, best-selling author. All right, let's take a look at where money was going today.